Welcome back to Trade Radar USA, your daily pulse on the US stock market. Wall Street just kicked off 2026, and the opening moves are already sending an important message to investors. Some indexes are climbing, others are stalling, and beneath the surface, something bigger is happening. If you want clear, no-nonsense market breakdowns that actually help you stay ahead, subscribe to Trade Radar USA and turn on notifications, because we cover what matters before the headlines catch up. Now, let's break down what today's market action is really telling us. On the first trading session of 2026, US markets opened mixed but cautiously optimistic. The Dow Jones Industrial Average showed strength, pushing higher as investors rotated into blue chip and industrial stocks. The S&P 500 edged up slightly, trying to build on last year's strong performance. Meanwhile, the Nasdaq struggled to gain traction, held back by weakness in major tech names. This kind of split tells us something important. This isn't a broad, easy rally, it's a selective market. So why are we seeing this uneven start? First, investors are coming off a strong 2025, especially in tech and AI-driven stocks. That means some profit-taking was inevitable as the calendar flipped. Second, traders are already positioning ahead of key economic data coming later this month, including inflation updates, labor numbers, and future Federal Reserve guidance. And third, the usual year-end Santa Claus rally never fully materialized, leaving markets without that momentum boost heading into January. In simple terms, investors aren't panicking, but they're being careful. Let's talk sectors. Industrials and blue chip stocks are leading early. This includes companies tied to infrastructure, manufacturing, and long-term economic growth, a sign that investors are rotating into stability. Semiconductors are holding up well, supported by continued optimism around artificial intelligence and data center demand. Megacap tech, however, is showing cracks. Some of the biggest names that carried markets last year are now dragging the Nasdaq lower. This kind of rotation doesn't mean tech is finished, but it does suggest that 2026 may not be a one-sector story. And this isn't just a US story. Overseas markets are sending mixed but generally positive signals. European indexes are hitting multi-year highs, and Asian markets are benefiting from strong export demand and tech optimism. That global stability is helping prevent major sell-offs in US stocks, but it doesn't guarantee smooth sailing. Global strength supports markets, but US data will still decide direction. So what really matters from here? Economic data, inflation and jobs numbers could reshape expectations around interest rates. Federal Reserve signals, even subtle changes in tone can move markets fast. Earnings season, company guidance will tell us whether optimism is justified or overpriced. This is the type of environment where discipline matters more than hype. And that's exactly why Trade Radar USA exists, to cut through noise and focus on signals. If you're serious about understanding market moves, not guessing, subscribe to Trade Radar USA right now. Like the video if this breakdown helped you, and comment below. Do you think 2026 starts with a rally or a reality check? The market's opening message for 2026 is clear. Opportunity is there, but it won't be easy or automatic. Stay patient, stay informed. And as always, keep your eyes on the radar. This is Trade Radar USA. I'll see you in the next update.